Some good news if you're looking to buy a new home. Mortgage rates fell again last week. Freddie Mac says the average on a 30-year fixed-rate loan is now down to 4.32%. Now, that's cheaper, but to put it in perspective, it's also about a full percentage point more than it was a year ago. But the housing news wasn't all good. A sharp drop in contracts to buy existing homes in December has realtors crying foul weather. But is it fair to blame the sudden slump in sales on the cold? Diana Olick has some answers.
I'm getting tired of this.
Below average temperatures and above average snow in much of the nation kept potential home buyers at home in December, at least according to the realtors.
You have to go out and you have to look at a house, and so if people are unable to get out of their houses, they're unable to get into the new houses, people aren't interested in hosting open houses because they don't want to be in a place by themselves, so that definitely plays a role.
Signed contracts to buy existing homes fell nearly 9% from November and from a year ago, to the lowest level since the fall of 2011.
We need the demand to be coming from really a strong home buying base. And what we see is that while there is improvement in the economy again, overall we're really lacking a broad demand base of workers. So employment levels are increasing, but they're actually still not where they were 5 years ago.
While the Northeast saw the biggest drop in so-called pending home sales, the West wasn't far behind, and it's hard to blame that on the weather. It's easier to blame it on weak wage growth and more Americans moving out of the labor force. The sales numbers for December do not bode well for January when the weather got worse, especially in the South. With its usually moderate climate, sales in that region do well in winter, but will likely get walloped this year. This was the scene not far from realtor Ben Hirsch's office. He spent much of Tuesday helping to dig neighbors out while at the same time trying to save his pending sales.
One of the side effects I see is people being unable to move out of their homes on schedule, and therefore their closing being put off because the home is not yet vacant. So I could see maybe 5 to 15% of the closings for the month of January possibly getting bumped into February.
So we may see a sales bump in February and March. Still, as investors who initially drove prices so high start to slow down, regular buyers will need to pick up the slack. Demand is there, but red-hot prices are already putting a chill on people's pocketbooks. For Nightly Business Report, I'm Diana Olick in Washington.